Hello, namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me is Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain in the bear grip, but where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks begin November's FNO expiry on the back foot as persistent selling pressure globally sends bulls into hibernation on Dalal Street. Nifty trades at 4-month low with little buying support seen at current levels. And it's an earnings-heavy day on Dalal Street with Reliance Industries leading 6 other Nifty companies in reporting their second quarter performance. 8 companies in future and options will also announce their September quarter report card. Very good morning, Shail. It's Friday finally, and if you see yesterday's trading session, it was a tough session for the markets. Nifty ended below that 18,950 odd mark. Sensex crashed over 900 points yesterday. But the good news is, it's Friday today.
Tanya, I like the list of priorities in life, and yes, thank God it's Friday. Good morning to you, and a very warm welcome to thousands of viewers who join us from different parts of the world, as also from India. Yes, it's a Friday, and let's just begin this discussion with the daily chart of the Nifty, and I'll show you some interesting statistics. Of course, the cues coming in from Wall Street were pretty dismal. We've seen the Nasdaq below 200 DMA. We've seen the Dow Jones index trading at its lowest since the 1st of June. But this is the Nifty daily chart in front of you. And a couple of interesting things, Tanya, happened yesterday, especially in the last 2 hours of trade. There seems to be some kind of, change in mood when it comes to at least the index, and we've seen 3 down days, 2 gap down days, and on 3 down days the Nifty has closed at its day's low, the number being 18,857 for you in the cash markets. Yesterday's losses totaled 264 points, down 1.4%. Now this is the lowest that we have since the end of June, so a 4-month low on the Nifty, but the texture and the granularity of the market, Tanya, seems to be changing, and this is around the 200 DMA. So one, a very strong technical support on the charts seems to be in the vicinity. Number 2, there is a lot of granular data to see that things, the maximum pain seems to have ended. You might fall another 100 points, another 150 points, but the smart money is now coming back into the market, and you can see it by the level of advanced decline ratios that were there in the beginning of the show yesterday. If you remember, I had said 1:49 on the Nifty, and that's the worst that can happen. And towards the close of the day, you had a fairly decent advanced decline ratio in the broader market as well. Remember that the market ended in negative territory, but like I said, the maximum amount of pain seems to be over. 19,200, 18,800, 19,000 seems to be levels which have been with the bears, but it's the bulls that are girding up, and let's see how things move on from Monday, Tuesday onwards. But smart money is coming back into at least major high beta stocks. Smart money is coming into a few index stocks, and that is how, at least how I look at the market. And as you very rightly pointed out, 7 Nifty companies and 8 FNO companies will be declaring their earnings today. Let's see how the sentiment changes for the better. But for the moment, let's just say that on the looks of it, the trend is down on the Nifty. On the first day of the November FNO expiry, the Nifty lost about 4.1%. In October, the Bank Nifty was down 5.5%. So the major part of the selling seems to be over, and it's only because of overseas cues. There's nothing wrong with the Indian market. You've seen geopolitical tensions in the Middle East, you've seen gold flare up, you've seen crude oil prices climb around $90 a barrel. So all this, the granularity of the data says that on the face of it, there is weakness, but underlying that weakness is a granularity that points to that the worst probably is over, and from now on let's see how it moves on. As far as option chains are concerned, you see a very strong support level at 18,800 and 18,600 on the Nifty, a very strong support at 18,500 as well. Let's hope we don't test it. 18,600 is fine, and of course 19,000 at the moment is a very strong resistance for the Nifty. Tanya.
Okay, absolutely. The worst is over. Let's see how the action pans out going forward. But let's talk about Bank Nifty also, Shail. If you see the trend is down there also, and the index is actually at its lowest level since 24th of April. And banking rollovers, they have mostly been on the short side only. Of course, Axis Bank is an exception. But what are the fresh support and resistance levels now, and what are you looking on Nifty Bank today?
Tanya, the issue as far as Nifty Bank is concerned is a series of strong sells that came in as far as October is concerned, down 5.5% on the Bank Nifty. We've seen a high of about 46,146 and at the moment at about 42,280, so a 4,000 point correction, 5% dip here. So Bank Nifty is now trading at its lowest level since April of 24. April 24th. So that's a bit of a pain, but like I said, it's at an area where the risk reward does not favor bears for a very long term. So you'll see support coming in on Bank Nifty as well, and if you look at the options chain, you have 42,100, 42,000 as strong support levels on the November 2nd expiry for Bank Nifty, and of course 41,500 is a very strong support. Let's hope we don't test that, but like I said, the falling knife has its limitations, and we seem to have completed about 90-95% of the fall. Any 5% dip from these levels off the total fall seems to be a zone where you can do small bit buying and be a smart investor, but I think the pain in the system is over.
Okay, absolutely, the pain is over. That's the word coming in. And let's talk about FNO space as well, Shail. Lots happening there as well. So what are you looking at in the FNO space today?
Tanya, like I mentioned, let the selling abate. At the moment, there is no point sticking your neck out on a Friday to discuss trades on the long side or the short side. The maximum pain in the short side is over. And there could be some more downtrend, but like I said, the risk reward is not in favor of bears. It may not be in the favor of bulls, but at the moment pressing further sales at the beginning of a fresh expiry is not the most sensible thing to do, and longs let's just avoid. The best way to play this is just buy a Nifty ETF at this point of time, and this is something that can be done.
Okay, absolutely. Just buy the Nifty ETF, that's the word coming in. And let's talk about the global markets also. We are getting negative cues from the global markets. So US stocks, that tumbled on Thursday. Dow Jones, if you see, that fell 251 points to 32,784 odd level. S&P 500 also lost around 49 points to 4,137 odd level, and Nasdaq also, that dropped around 225 points to 12,595. Brent crude oil prices, if you see, Brent crude futures, that climbed around 45 cents to $88 per barrel mark. Gold was also slightly higher on Thursday. But coming to you, Shail, what is now essential to track from all these overseas cues?
So, Tanya, like I mentioned, that the pain came from the overseas markets yesterday. There were major falls both in the Nasdaq as also the Dow Jones Index. The Nasdaq down about 1.8%. The guidance that is given from Meta as also from the earlier tech giants doesn't seem to be going down well with the market. And of course, we have Google, whose cloud revenues fell below analyst estimates, and there was a sharp sell-off there. I would imagine now that the Nasdaq is below 200 DMA, the pain in the system, like I said, seems to be easing. Let's hope we've seen the worst as far as the Dow and the Nasdaq are concerned. Both of them are below now 200 DMA, so some sensible buying should emerge overseas. Of course, everything, Tanya, is dependent on what happens in the Middle East. The moment the ground invasion starts, you'll see a knee-jerk reaction, and then markets will be on their way. See, this uncertainty is there, which has been in the market for the last 10 odd days, is mainly on account of the fact that the ground invasion has not begun in the Middle East. Once that is in place, then the market will say, okay, a major event is over. Now let us see the outcome. Until the outcome comes, let us resume our upward journey. So it is this level of uncertainty in the market that is resulting in a global risk of trade from equities. Once this uncertainty is over in the form of the event taking place, the decision of the event will come later. We'll think about it a little later. But it is the ground invasion that needs to is getting reflected. The uncertainty on that ground invasion is getting reflected in the uncertainty in prices. And in such times, people sit on the fence, they book their profit and remain in cash and wait for better levels. So that is how things are, Tanya, as far as global and domestic pressures are concerned.
Okay, absolutely got that. And with that, it's now time for us to welcome our market guest on the show. We have with us Mr. Mayuresh Joshi. He's the head of equity research at William O'Neill India. Good morning, Mayuresh. Always good to have you on BTTV. And I'm so glad that there was no technical glitch this time around. But yeah, welcome to the show. Mayuresh, starting with your market outlook only. So we have seen, markets are in the bear grip. Nifty is now below 18,950 odd level, and also Sensex crashed 900 points yesterday. So I want to understand from you now that what should be the strategy going forward, and how are you approaching markets?
Morning, Tanya. Morning, Shail sir. So I was just hearing Shail sir's opening remarks, and I completely concur with that on how we see that at the markets bet India as well. The uncertainty that is coming through in terms of the geopolitical risk, I think that has taken the sheen off risk asset classes, especially equities across the globe. To top that up, the kind of economic data that is coming through from the US markets and a lot of varied data coming in from Europe and Southeast Asia as well, with China still to recover in terms of the real estate issues and then demand concerns emanating thereof as well. I think there is a lot of volatility that is expected in terms of global dynamics, both geopolitical and economic front as well. On our own domestic front, our standing when it comes to macros and micros are relatively better off. I mean, at Nihans, we've spoken about this, and a lot of other analysts as well, in terms of how India is better placed from a macro perspective. As earnings have started coming through, earnings are also pretty resilient as far as most of the sectors are concerned which have reported so far. Albeit some sectors like cement, paints would see some tad bit of a disappointment, but festivities expected around, some bit of hope and recovery expected to come through, but a large part of earnings have largely held up. The only thing that the markets are probably bracing is the local and the general elections thereafter. So that is where I think the volatility might continue as far as the markets are concerned on the domestic front. So I think a cocktail of all these combination of factors put together and how we see it at markets with India, I think let it stabilize. I think give it a few more days. A bounce is expected into the markets very clearly at this juncture. And in bull markets, like we've seen in the past as well, corrections come sharp and they're very vicious. So what we probably see in terms of cuts in the broader markets are part and parcel of how bull markets function. But over the next few days, we'll definitely like to see whether the intermittent bottom that Nifty is forming is being held. If that probably happens over the next 3 or 4 days, we'll get into a rally attempt on the O'Neill lens. And if we get a strong move on the Nifty of 1.5%, 2% after that, the conviction stays that probably we might have seen the bottom for this leg. Just to put in context, Tanya, every bear market and every bear market correction that probably comes removes froths and excesses. And as O'Neill himself had put it, it gives a very good opportunity to get into stocks for the next bull market that has to.
Good morning, Mayuresh, and it's always a pleasure to listen to your views. I'm sure you have a list of stocks ready in front of you, in front of your computer terminal or your laptop, where at least you are watching prices and maybe waiting for a sudden dip to be purchased. Mid caps, small caps, large caps, what would you prefer? And maybe one or two names that you could share at this platform.
Morning, Shelton. Oh, absolutely. So I think on our watch list, 3 or 4 sectors which are absolutely coming through. Banking and financial services have not disappointed at all. So our take is that this is one sector that you should definitely keep an eye on, out for. A lot of companies have reported very decent set of numbers, whether they are large cap banks, private sector banks, or even NBFCs to a certain extent. So our take is watch out for NBFCs like Credit Access Grameen as an example. Fabulous set of numbers. So that definitely comes onto our watch list within the NBFC space. Axis Bank, great set of numbers in our opinion, and a lot more is changing for that bank as well. So that becomes part of our watch list as well. Autos, auto ancillaries, obviously a lot has been said about them, but our take is that the resilience might continue. And with the transition that is happening clearly from petrol and diesel to electrical mobility, and the way the auto companies are transitioning and the auto ancillary companies as well, this is one space that you should definitely keep an eye out for. Maruti Suzuki, out of the top names, will be on our watch list. Similarly, within the auto ads, something like a JK Tire will be on our watch list. And therefore, I think that this space also becomes very, very interesting to probably monitor. The capex and infra theme, obviously, I think this is something that will continue with general elections expected around the corner. A lot more projects will get awarded in the next quarter. And very sharp execution will happen. Monsoons are almost, I mean, we are done and dusted with monsoons. And yes, they were deficient, but I think as activity picks up quite significantly, a lot of stocks within the spaces. So I think a lot of large caps like an L&T will definitely be on the focused watch list to probably look at as the market bottoms out. So as Ultratech Cement, as a lot of activity probably picks up, and Dalmia Bharat within the mid-cap space as well. Last but not the least, I think a few of the mid-cap IT stocks have done reasonably better. And if the market probably gyrates into a range, I think mid-cap stroke pharma selectively becomes very, very defensive. So I think this is one space to be watched out for. But we'll see how the numbers come out for the rest of the companies within the space. So I think for the first 3 sectors, I think there is a lot of scope in terms of a lot of stocks breaking out and expected to break out. That should be part of your watch list as discussed.
Yeah, Mayaresh, I was hoping that you'll at least share one or two names, and it's been a crisis of plenty and a wonderful discourse in how heads of research look at markets. 2 stocks that you mentioned, of course, Axis Bank and Credit Access Grameen. Our common friend, Mr. Deepan Mehta, was on the show about 2 days ago when there was all-round carnage. And the one stock that he mentioned that should be a part of portfolios was Credit Access Grameen, and he gave a very clean disclaimer that the clients own it, and that's a stock that you need to look at. A second vote of confidence coming in from Mr. Mayuresh Joshi. So this is a stock that you need to look at in terms of adding to your long-term portfolio. Axis Bank, yes, blowout numbers yesterday, and the stock in all the carnage that was all around us in the banking sector, on the Nifty and in the broader markets, Axis Bank was one of those lone winners on the Nifty. So these stocks, yes, in the mid cap and the large cap space. And yes, JK Tyre. This is a stock that hit an all-time high fairly recently, and it's the tire sector which is coming up with not only very good technical charts, but yes, a very good underlying demand coming in from the OEM auto space. So wonderful stock picking, Mayuresh. We are very grateful and we are very thankful that you formed a part of this panel today. Beyond these, what do you make out of how gold has firmed up? Given that the ground invasion in the Middle East is still some distance away, how do you see gold prices?
So I think the natural reaction has already occurred in terms of how gold has reacted. Obviously, for a large part of last year and a half, it traded in a range, both in terms of international prices and how local prices react to international prices as well. So I think unless the crisis deepens off, Chelsea, in a very significant manner, I think if the escalation goes beyond what we are looking at, the Israel-Hamas conflict, and the entire Middle East probably gets engulfed in this, then you're probably going to see some element in terms of volatility creeping in terms of how crude pricing will be placed, and therefore gold reacting to that as well. But I think if that does not happen, I think it will again probably just shift down into a range. And a large part of the trade in terms of the bullish aspect of gold might just get petered off. So again, with the disclaimer that if the escalation does not have a blowout implication, I think gold prices should come back to normalization.
Absolutely got that. And Mayuresh, let's talk about auto sector also. This sector is going through good times, and I was reading a report actually. Auto sector mutual funds, they are also the second top performers among the sectors in the last 1 year. So your top two-wheeler and four-wheeler picks from the auto space?
So again, I think phenomenal performance, and as I mentioned, the performance in terms of expectations on how the transition is happening, Tanya, both in terms of the internal combustion engines, the petrol and diesel versions, to the electrical mobility and platforms part, is happening in a very smooth manner. So as this transition takes place, and with the kind of capex that a lot of OEMs, which is the auto companies, are putting in towards mobility platforms, electric platforms as well, including two-wheelers, including four-wheelers, I think a large part in terms of that transitionary aspect has been gestated very well. So the kind of footfalls that you are probably seeing, both in terms of expected launches that are coming through, the launches which are happening even on the two-wheeler front, the kind of response that you're probably getting, I think that is something which is very, very encouraging in terms of volume growth. Having said that, I think a lot of concerns that were there for the industry per se, semiconductor issues, input costs had blown out, so they had to pass it through in the preceding few quarters. I think a large part of these headwinds are largely behind us, and therefore volume and value growth both should start coming through for the overall sector. Obviously, the beneficiaries, as I said, also become a lot of these auto ancillaries at play, which also benefit both from the OEM and the replacement market as well. So again, on our watch list, as we are seeing it, and very clear as a disclaimer, just a watch list at this juncture that we are tracking. Maruti Suzuki probably remains one of our watch list stock. A lot of transitioning has happened in terms of new models being introduced, management being very, very sanguine in terms of gaining market share over the next few quarters, and a large part of their balance sheet growth coming through in terms of both their product mix and the expectations in terms of better value coming through, translating into better bottom line growth. On the two-wheeler space, obviously TVS Motor has been a huge outperformer in the markets. Bajaj Auto as well. I think the kind of commentary that has come through, both for the domestic market and the export markets, which probably was a laggard in terms of their consolidated performance, should start picking up. But between the two, again, valuations on the higher side as well, they have moved up quite significantly in terms of price action. But TVS Motor is something that if somebody is holding, should hold on. Many things are happening, both again in terms of launches, getting a spread in terms of geographical presence, out of the south into the west and north as well. And the products getting very good feedback in terms of both response as well as new dealerships and dealers, distributors being added to probably ensure volume growth happens. So I think these two stocks might be there on your watch list, but TVS has moved up. So I think if anybody's holding it, should definitely continue.
Right. Mayuresh today is on a roll, and a series of fantastic stock picks coming in terms of how long-term portfolios can be created at a time when overall markets are in a fairly weak but a very strong buying zone. Remember, good prices and good times don't come together, and it is either one of them. Either you can have an excellent price and a fairly bullish move, or you can have a very weak price where sensible investors buy and wait for good times to roll. So wonderful, Mayuresh. What a fabulous exposition of stock picking. Let's hope our viewers get benefited. And ladies and gentlemen, we have a nice uptick on the Nifty as far as the pre-open trades are concerned. I'm sure it will settle towards the sensible side, but it is such a relief to see a 74-75 point uptick on the Nifty after days and days of pain. 89.23 in front of you. Let's look at how the top end index heavyweights are structured. ICICI Bank 1.5% higher, 922. What is earnings boy Reliance doing? Remember, post markets close, you will have earnings today. 22.38 down 0.5%. How about HDFC Bank flat at about 1463, and Infosys flat at about 1359. It's going to be a banking day. Kotak is up 0.3%, 1700. Let's look at Axis Bank 975, 0.3% higher, and of course State Bank of India 550, 0.5% higher. So a nice shade of green on the index heavyweights. TCS is 1.7% higher, 33.95. And let's look at the defensive pack, ITC as well as Hindustan Unilever, both of them shedding 1% each. So the market is now shifting towards riskier equities within the overall equity universe. The Nifty is still 16 points higher at about 18,874. We'll see how the show gets structured from now on. Let's shift focus to the FNO space and look at stocks which are buzzing in the green apart from the index heavyweights. Okay, high beta is back and back with a bang. PNB is the top gainer, 3% higher, 72. Very, very strong numbers coming in from Dixon Technologies, 5% higher, 55.96. ACC is up 1/3%, 19.06. You have green ticks coming on Dalmia Bharat, HCL Tech, Voltas, Delta Corporation, IDFC and Birla Soft. Remember, these were stocks that were beaten black and blue over the last 1 week or so, and it's the reversal of trend, or at least some buying support, bottom fishing happening on these high beta counters. Let's look at stocks that are losing ground on FNO. Colgate Palmolive down 1% at 2000, but this is a stock at record highs, so there's no issue here. Balkrishna Industries, fresh 52-week high, 25.56. Lever ITC in a bit of a pain, but not much. Ipca Labs shows profit booking, 0.5% lower, 973. Let's look at Nifty 500 and then we'll go back to our analyst panel. Okay, ladies and gentlemen, the top gainers. Delta Corp 10% higher, 139. The overhang of the GST demand seems to be getting over after a hearing in the Bombay High Court. Shriram Finance, very strong numbers, 2.9% higher, 1849. We have Jindal Saw, 2.6% higher, 398. Rallis, 1.5% higher, 220. So these are the stocks in the green, and the Nifty is now gaining ground, 36 points higher, 18,894. Mayuresh, a sigh of relief, I am sure, across the board, seeing this green tick on the Nifty.
Yes, I think, and it was an oversold zone as well. So as we were discussing at our internal meeting as well, it has definitely gone into oversold territory at this juncture. And I think the markets will take a breather at this juncture and see what is happening and emanating on the limit front as well. Interestingly, I think the FI positioning is almost 90%, and they are carrying these shorts at 90%. Once these levels are reached, there is an expectation that there is some covering that is expected, and therefore a bounce is probably not booked.
Tanya, what are you watching?
Actually, Shell, I want to see what Reliance Industries is doing, because the focus will be on this stock as well. The company is all set to release its second quarter earnings, and if you see the expectations, the company is likely to report 25 to 28% year-on-year jump in its net profit on a single-digit degrowth in sales. EBITDA margin is seen falling on a sequential basis, but yearly basis, if you see it, it is likely to increase 400 basis points. So I want to come to you, Mayuresh, for Reliance Industries. What are your expectations and what should be the strategy ahead of its numbers?
Tanya, I think we were just joking internally, and this has become a fact that you probably need three analysts to track Reliance now: one oil and gas, one retail, and one telecom. And that is how the positioning of
Right.
Reliance is. So to that extent, the retail portion, which is Reliance Retail and telecom, should relatively hold up. I think we've already seen reasonable amount of ARPU increases as far as the telecom vertical is concerned. Subscriber additions have been reasonable, and therefore this part of the business should hold up pretty well. Similarly, for retail, some bit of lag can happen in terms of margin performance, but with festivities coming in the third quarter, the improvement definitely should be there with the kind of additions in terms of stores and space that they've probably added through. Oil and gas, again, I think a little bit volatile with kind of prices that we've seen. But the kind of feedstock options that Reliance has, GRMs will definitely be better than most peers, as well as Singapore GRMs as well. For downstream, again, because of the volatility that we've probably seen in prices, the petchem side of the business should be relatively stable, but very uncertain because you really don't know what kind of pricing chain has got affected in the quarter gone by. So I think the volatility in commodity prices, downstream product prices as well, might have some impact in terms of numbers. And what is the strategic input that comes through? That is what the street probably wants. Any firm decision making on geofinancials. So they've got a good team in place. What are the strategic insights in terms of gaining market share, starting to gain AUM? What targets are they? What segments are they targeting? Is going to be extremely critical. And they've already explained the plans in terms of renewables and green hydrogen, going in a very, very calibrated manner, so not to increase excessive debt onto their balance sheet as well. So steady set is basically what the street is probably expecting from Reliance on stocks.
Okay, absolutely got that. And now we also have with us Mr. Brijesh Shail, who is the head of technical and derivatives at IDBI Capital Markets and Securities. Good morning, Brijesh. Good to have you on BTTV. Let's start with your technical market outlook. I mean, how are you positioned on Nifty, and what would be your top technical bets?
Yeah, so I think somewhere today is the day after the expiry. There can be some bounce can be expected. Basically, this bounce is still a breather. Maybe the correction what we have seen from the level of 19,500 level, there can be some amount of pullback. But then structurally, I still believe that there is somewhere the market is negatively placed. So the levels of 18,600, which is 200-day moving average for the Nifty, may be retested in the next couple of days. So that we can take the trading bets, but then if someone wants to take the positional bet, I think one has to wait and watch. Uh, Slight pullback can be there for the day, but then I'm not very sure of taking the positional bet. Again, if you look at the long short ratio of the FIs in index future yesterday, so again they sold close to 50,000 contract and they are net short by close to 156,000 contract. And this long short ratio is 11%. Even in the previously, if you look at the historic data, during the 22nd of March, the FIs have went short and the short figure was almost go to 196,000 contract. So there is a space. We are in an oversold zone. Pullback should be there in the cards, but then that just it should be viewed from a trading point of view, not from the positional point of view, is what I believe.
Okay.
Fair point. And Tanya, you have a 71-point uptick on the Nifty, 18,930. And the Nifty Bank is showing very strong signs of opening above 42,500. The uptick is 275. Remember, banks were thrashed the maximum, and it's the banks where very strong numbers have come in. but it's the stocks that have disappointed. So the swing will be the sharpest on the way up as far as banks are concerned, and therefore you see a very strong up move in the initial trades as far as Bank Nifty is concerned. To you, Brijesh, good morning, a very warm welcome on BTTV. What would be your top Nifty pick based on rollovers and based on technical charts?
So specifically rollovers, there is no strong rollovers where we can see any long build-up, but there is stocks something like SBI Cards, Adani Ports, Ambuja Cement, and Alchem. These are the four five bets where seeing a very good amount of rollovers. So basically, if anything positive comes in this pack, for example, Ambuja Cement and Alchem, both from a technical point of view, is also looking positive. So I think that should be kept on a radar. So, my bet would be on Alchem and the Ambuja Cement. From the trading perspective, to take the intraday 1 or 2 is kind of a long position.
Okay, and a couple of stocks I wanted to check both with Mayuresh as well as our friend Brijesh. To you, Brijesh, first, Pidilite. I haven't seen a 9-day fall, a 9-day continuous fall in Pidilite ever, and the price that you see is 22.95. Brijesh, to you first, do you think a swing trade is could be in the making, given this very sharp fall that we've seen over the last fortnight?
Yeah, so basically it's in a downtrend. The structure is lower top, lower bottom structure in the daily as well as in the weekly time frame. Only the concern is this 2240 is the level where earlier it has taken support. So maybe again from the trading point of view, okay, I can take this call. Maybe another 20-30 points lower. There can be a favorable risk reward ratio where we can play for the bounce back trade. But if one has to take the directional view, I definitely would take. I would not take the directional view. Trading view close to 2280 can be viewed as a buying opportunity for the 2350, 2380, 100 odd points kind of a move can be seen. But positionally, I would like to avoid as at current point of time.
Okay, and Mayuresh, to you, sir, a very sharp sell-off in Asian Paints yesterday. CLSA coming out with a report today confirming its buy status on the stock. Your view on both Asian Paints and Pidilite?
So for Asian Paints, Shail sir, I think the volume growth lower than what the street was expecting. But obviously, I think you've seen festivities getting shifted to Q3. But I think the commentary was a little bit concerning as well. They mentioned both erratic monsoons as well as a weak demand environment that has probably affected that. Now, with deficient monsoons that have taken place for a large part of India, specifically semi-urban and rural areas, discretionary spending can actually come off. And if that probably happens, volume growth might still be on the lower side. The risk factor that remains is crude prices have moved higher, which means titanium dioxide, which they use, which is a derivative of crude, is definitely higher, but they will not be able to pass that through in lieu of weak demand that is probably expected in the coming quarter as well. I think some respite in the next quarter as festivities come in, but will it be a full-blown recovery that comes through? Probably remains a little bit of a questionable statistic on that front. So I think might underperform the market over the next couple of quarters. For Pidilite, उनका फेविकोल का जोड़ शेल सर प्राइस को बचा नहीं पा रहा है. तो मुझे लगता है कि I think the kind of the performance that Pidilite has delivered on numbers, and even though they've got a very strong pedigree in terms of a product profile and getting into new products and value-added products as well, I think numbers are not getting translated to give confidence to the street that the kind of compounding that one expects in terms of numbers, in terms of performance as far as financials are concerned, I think they're still lagging at this juncture. So I think both these stocks might underperform the market to a large extent.
Okay, absolutely. And we just have 1 minute to go for the market opening. Shail, you want to take it away?
Yeah, Tanya, let's look at how at least the two major indices have settled. A 75-point uptick on the bank on Nifty at about 18,928. So 18,900 would be the fresh battleground as far as bulls and bears are concerned, and I'm looking at banks to sort of take it away as far as today's trade is concerned. A 275 point uptick, a gap up after 5 days of carnage on the Bank Nifty. So we'll see short covering happening. We'll see the first trade in the November FNO expiry beginning on a green note, and it's really good. In fact, the index has moved even higher. On the Nifty, 82 points higher, 18,941 is what I see. Nifty Bank 252 points higher, 42,554. The gap up is gaining strength. At the moment, the Nifty is at 18,954. An uptick of close to 100 points. So the gap up, ladies and gentlemen, after 5 days of very serious fall, is putting the bears on the back foot. You will see a fresh bout of stock short covering happening on the first day of the FNO expiry for November. Okay, let's look at the winners. ICICI Bank 916, 0.8% higher. Axis Bank 979, 0.7% higher. HDFC Bank in the green, 0.7% higher, 1473. It's the bulls that are taking it away. Infosys 0.64% higher, 1368. Ladies and gentlemen, the first 10 stocks in terms of index heavyweights are in the green. It's going to put bears on the back foot today, and especially because it's a very heavy earnings day. Reliance 2240, 0.7% higher. ITC lever mildly flat, but it's going to be a very, very strong day, so it seems, as far as the indices are concerned. The Nifty 93 higher, 18,949. Let's shift focus immediately to FNO stocks, top gainers. Earnings boy Shriram Finance 5% higher, 1887. PNB 2% higher, 7120. Dixon again earnings very strong there, 2.8% higher, 5490. Let's look at the broader markets, the advanced decline ratio. That alone will tell you what the market is thinking. Tanya, it's a day that will belong to the bulls. At least this is what the initial data is. There are 1550 advances on the National Stock Exchange compared with just 174 stocks that are down. So the advanced decline ratio is 7:1. NSE 500. There are just 31 stocks in the red, 470 in the green. As far as Nifty is concerned, 45 stocks are in the green and just 5 in the red, so 9:1. Let's look at the volume picture and see how at the moment the top gainers are. Okay, in FNO, Tanya, the top 20 stocks with the heaviest volumes are trading in the green. Coming to Brijesh immediately. Brijesh, what would you do? Does 18,900 weekly call on the Nifty make sense on the long side? Let me just check the price before you give your views. Over to you.
Yeah, definitely, sir. For the day, I believe this level should be held, and somebody wants to take that risk can definitely take. The way the market is open, I think at least for the first half of the session, it is going to sustain this level. Somebody who is willing to take that risk, 18,900 call option for the weekly expiry can be bought, because the bounce can be expected to somewhere close to 19,100 level. So this is the expected bounce. So for this, somebody who wants to play, I think should take that call.
Okay, your first comments, Mayuresh, on this fantastic move on both the Nifty and the Bank Nifty. 97 points higher on the Nifty, 18,955. Let's hope this is not a dead cat bounce. Your initial thoughts?
So yeah, I think it's a very positive move, and more or less, I think a lot of people on the street were expecting this bounce to come through. Let's hope. I think the follow-through action probably continues. But as I said, Shail sir, I think the next 3-4 days, as we see it at O'Neill, are very, very critical. Whatever low that we are witnessing, if that probably gets held on, I think we might get into a rally attempt, and then a follow-through day might substantiate the fact that we've seen the worst. But I think the next 3 days becomes crucial. But yes, I think the opening is very, very positive for the market.
Okay, absolutely. And Brijesh, we were talking about Reliance Industries. Let's take a quick technical check from you as well. What are your thoughts on Reliance Industries ahead of its Q2 numbers?
Madam, the charts, this 2280 was the breakdown level from the charts point of view. Some trading bounce is expected triggers. I think 2250, 2288, 2280 is going to act as a resistance. So not pretty confident of the Reliance to take any trading bet as of now. I would give it a pass since I don't think there would be a much upside. Means I'm not pretty confident, but then it is. I would like to give a pass. I won't take any trades.
Okay, and what about Shriram Finance? It's the top gainer from the FNO space. Very strong quarterly numbers as well.
Yeah, so definitely, madam. I think the way it has seen a gap up opening, it is going to see the this 1915 2000 levels as a range breakout. So I think this can be a positional as well as a trading bet. Today, the stock is already up by 6%. So whenever the stocks do trade by closes in the first session, normally in the end of the trading session also, this continuation of the momentum is always seen. So I think this is again a very good catch. One should take the position even at this 7%. It's already high. I think one can take this view from the FNO or derivatives point of view. I think 1958 would be the immediate upside, and gradually it should go up. So it's a positive bet. One should take at current price itself.
Okay, absolutely. And what about you, Mayuresh? What are your thoughts on Shriram Finance and how do you look at the numbers that the company has posted?
So decent set of numbers, Tanya. So I think the commentary now is something that should be watched out for. Obviously, the expectations in terms of growth in certain segments and how will that continue? I think that is going to be extremely critical. The second element, obviously, is also the expectations in terms of provisioning and the expected loss provisioning as well. So I think a lot of NBFCs will have to probably also brace for that in terms of some buffer provisioning needed to get created onto the balance sheet. And obviously, I think expectation in terms of individual growth segments itself,
Ask a
which should
question.
be at a decent pace. So I think decent set of numbers, in my opinion, from Shriram Finance getting reflected in terms of this.
Okay, ladies and gentlemen, we've had the first 5-7 minutes of trade, and what's interesting is on the Nifty intraday chart, the second 5-minute candle is now gathering momentum. It's remember the day's high so far is just a moment, please, somewhere like 18,960. So if the second candle closes above 18,960, then you will have a fresh momentum coming into
Yes.
the Nifty at least, which is now racked up a century, up 100 points, 18,959. And yes, for the moment, the Nifty is at a fresh intraday high. And remember, the first resistance is at 18,985, and yesterday's high was in the vicinity of 19,028. Well, that's a bit far off, but let's look at the first resistance if it crosses, which is 18,986. Brijesh, to you, how do you see the initial first or the second, the first 10 minutes of Nifty trade?
Sir, I'm extremely positive. From the pivot point of view, the immediate resistance is 18,986. So normally this is the trade setup. Whenever in the first 10-15 minutes, if the R1 level is taken out, there is a tendency to retest the R2 level, which is at 19,116. So it is looking quite positive. So the conviction and the confirmation will come as and when it trades above the R1, which is at 18,986. But I would like to take this bet, and I think one should go along at the current price. The maximum correction as of now is somewhere close to 18,900, is what I believe. Just in case if there is some sell off.
Okay. Let's hope, like I said previously, that this is not a dead cat bounce. And the options trade that we are watching on our radar is the 18,900 call on the Nifty for the expiry of 2nd November. Remember, we caught it at somewhere like 160. At the moment, it is at 167. And yes, there is fresh momentum coming into the Nifty. The first resistance that I mentioned was 18,986. The Nifty is just 5 points away from it. Let's hope that resistance breaks away and gives way for the next resistance level to be taken, which will be the yesterday's high. So very, very strong momentum coming in. Nifty is now up 121 points. It's a 20-point gap up move over the last 2 or 3 minutes, and it's the battle at 18,987. Remember that R1 has also been taken out, and it's driven by Reliance, it's driven by Maruti, it's driven by Hero Motors, Tata Consumer, Titan. In fact, there are about 19 stocks, 19 index stocks that are at intraday highs in front of me. So it's a day that probably will belong to the bulls, and this is at a level where the 200-day moving average is acting as a very strong support and a bounce for the Nifty. It's a sea of green across wherever I look. Tanya, you pointed out Shriram Finance, days high 1944. Actually, it's a record high. And another stock that's ticking very well is Talbros. I think it's the stock price adjustment to the bonus that has happened. The price that I see is 236. This is a 5:1 kind of an adjustment that's happened. So you need to sort of keep that in mind when you read this price. And taking it away is Bombay Stock Exchange. Mayuresh, your view on this stock, Bombay Stock Exchange. 4x rally in the last 4 months.
Stupendous rally, Shail sir. And even in the falling market, I think the stock showed significant signs of resilience for obvious reasons. The new products that are getting introduced, they are scaling up the rates on a few optionality contracts as well, which will probably aid and increase their revenue potential as well. The annuity part of the business is building up pretty well. With the kind of new investors coming in, the trading part of the business and the volumes thereof ensure reasonable amount of transaction fee to the exchange platform as well. And that is what has kept the stock afloat even in tough times like these. But you're absolutely right. I think this has been one hell of a move in the last few months. Obviously, I think it's a late stage base as we see it at Markets in India. Valuations are nowhere comforting. So I think all momentum investors, stock traders who are in the stock, again, a word of caution, have your risk controls in place for this stock as an exit option, because if the reversal comes through, it can be pretty brutal as well. But yes, I think the stock has done phenomenally well over the last few weeks.
And look at Nifty PSU Bank Index. That index is on a roll today. We have all the stocks in the green except central bank. So Mayuresh, coming to you for PSU Bank banking space. I mean, look at Canara Bank, Union Bank of India, and then PNB, Bank of Baroda, all trading 2 to 3% higher in today's trading session. Any picks that you like from this particular sector?
I think we'll watch out for the largest one here, Tanya. Obviously, I think we had a few holdings within the mid-cap space. Our targets are met. We've booked out in terms of our recommendations as well. So at this juncture, I think numbers have been pretty decent for whatever mid-cap PSU banks have reported so far. But I think on our watch list again will be a stock like a State Bank of India. I think clearly the stock has not performed as well as its peers have done. But again, I think the sheer size that this bank probably carries, the expectations in terms of reasonable advances growth, NIMs might probably get compressed, but that is for the system as a whole, as we are seeing. But a large element in terms of growth coming through, asset quality pressures have come off quite significantly for the bank and the system as a whole. And therefore, this is one bank within the space out of the large caps that definitely should be on your radar.
Okay, absolutely. And let's look at some of the IT stocks as well. So we have been talking about mid-cap IT space and how that space is doing far better than the large cap IT. Any picks that you like from the IT space, especially mid cap IT, Brijesh, and your views specifically on persistent system? Because if you see, the stock is up to the tune of 2% today. 5978 is the level where we are at this point in time. Your thoughts?
Yeah, Tanya, so I
It's
was
the top F&O gainer as well from the IT
Yeah, I
space.
was going
Yeah.
to say about the persistent because that was one counter which never broke in this morning market, and now clearly it is giving a range breakout for the last 31 trading sessions. So definitely the volumes are getting picked up in persistent. So it's a trading bet. So I think one can also look for the positional bet. So I think somewhere close to 6,200 should be the reasonable upside for the this persistent. It's one can also take a bet in the F&O space. It's extremely looking positive. I think today, by end of the close, another close to more 2.5-3% kind of gain should be seen in the persistence. So this is one. I would like to add one more stock which is in my list is Canara Bank. I cannot skip my eyes. I think the Canara Bank, the way it's opened up, I think it's going to see a very good amount of upside. 390 is possibly maybe the intraday upside also for the Canara Bank. It's looking extremely positive on charts. So Canara and persistence should be viewed immediately from the trading point of view as well as the positional point of view.
What about you, Mayuresh?
Or for PSU banks?
No, for mid cap IT. So we were talking about persistent systems. So your thoughts and any picks that you like from the mid cap IT space?
No, so we have persisted in the global focus list, Tanya, as a clear disclaimer. So anybody holding on to this stock should clearly hold on. As I said, mid-cap IT earnings have been reasonable so far, have been pretty resilient as well. A few stocks, obviously, like a KPIT, Sonata, are late-stage basis, and they've moved quite significantly compared to rest of the pack. But I think numbers are also justifying that. So the momentum might continue for stocks like these. But yes, something like a persistent is something we continue holding on to our focus list. So anybody having that can definitely.
Fine. Let's look at the broader markets now. A 120 point uptick on the Nifty. We've had the first 15 minutes of trade, and the Nifty has been able to not only hold on to its opening gap up of about 80 points, it's added a further 40 points to its tally. At the moment, the battle is at the first intraday resistance, 18,986 in front of us. If this resistance is taken out, then the rally moves to the next level, which is 19,028, which was yesterday's opening day. So that's how the intraday structure is at the moment. A fairly strong move coming on the banking space, as Tanya pointed out. The Nifty PSU banking index is the top gainer with 12 out of 12 stocks ticking in merrily in the green. Where is fresh momentum coming in? Let's speak to Brijesh on NTPC. Remember, this was a very, very high beta stock that was making fresh waves on the bullish side. How do the daily charts look to you, Brijesh? What would be your view? 235 we've seen at day's high. What would you do?
So which stock you're talking of exactly?
NTPC.
NTPC 235. Okay. So from the charts point of view, I think it's taking support at the 50-day moving average. Some strength is I think there is some amount of strength is coming in. It can be again the highest resistance is 245, 260 level, 250 level. So I think that can be retested on the cards. So I think it's again a trading bet. So one can play for this 15-20 points kind of a move. It is looking positive on charts. So.
Stellar quarter numbers, second quarter numbers. So I want to come to you, Mayuresh, for Canara Bank. If you see, the profit is up 43% and the net interest income, that is up 19% to 8,903 odd crore rupees. What are your thoughts after the numbers on Canara Bank?
Very good set of numbers. And in fact, I think before this quarter as well, I think the bank has posted a very decent set of numbers. The management was very, very clear in terms of the humongous deposit growth that the bank has witnessed. And obviously, I think the four parameters that we've been discussing at Nuance, at Nausea, asset quality, provisioning, expectations of advances growth, capital adequacy, risk-weighted assets. I think all of this is probably in the right direction as we speak. And the expectations in terms of accelerated activity in the second half, with festivities coming through, with a tight control in terms of both costs as well as asset quality pressures, that should probably prop up the pre-provisioning operating profit even more. So I think the stock is in fine fettle. It's in good momentum. Anybody holding can definitely look up the stock. It looks good for.
Okay, and what about you, Brijesh? Quick technical check on Canara Bank.
Yeah, madam. I think this momentum should long till 390 levels, and then further continuation of the trend can be there. This 390, I'm talking from the intraday perspective. I think that it's quite evident that we can see this. In future, it's 379 right now. Another 10 points more is what I think can be seen in the Canara Bank from the intraday. And positionally, definitely, it's a good bet. I think PSU, we are extremely positive. So, as Mayuresh said, the SBI is one counter which is not performing as of now. But then I strongly believe SBI, Canara Bank, Bank of Baroda should be the bets which should be kept on your watch list. And now I think Canara is heading towards the 390 levels.
Okay, absolutely got that. And Nifty is, by the way, up to the tune of 135 points now. 18,992 is the level. It has taken out the first resistance. And let's look at the top gainers. Of course, we have NTPC that we just discussed. We have Adani Enterprises, M&M. These are some of the top gainers from this back. What are you watching, Shail?
Tanya, my eyes are glued on the Nifty. As you rightly pointed out, the first resistance has been taken out. So it's the bulls that are now in strength. And I have a lot of technical charts which are giving fairly strong buy signals, at least on the intraday basis. So 137 up at almost 19,000. It's 18,996 in front of me. And this is how the structure is. Remember, we had picked up the option of 18,900 call expiring on November 2nd at 160. It is now trading at 177. That was a great call given by Brijesh, and it's working pretty well. Bank Nifty is also at its day's high, now 367 higher, 42,643. So that's how the game is structured. I think today all action will be on these two indices as far as trades are concerned, and you'll see some short covering coming in, because all those shorters who had carried forward their rollovers from Thursday to Friday into November's fresh expiry will now be really hesitant to carry those shorts over the weekend. So their short covering will come in, fresh buying will come in, and that will add momentum to the Nifty. It's already crossed 19,000. So the next resistance level will be 19,028, which was yesterday's high. So you're going to see a mild massacre of bears happening today, Tanya. Let's hope and pray this is not a dead cat bounce.
Absolutely. And Shail, look at Wellspun India. The stock is actually up to the tune of 6% in today's trading session. And the company reported its numbers, and it was actually down 9% yesterday, because some brokerages, they said that the risk reward is unfavorable at this valuation. I want to come to you, Mayuresh, for this Wellspun India. That what are your thoughts after the results?
So, good set of numbers, in fact, for Welspun India. I think both their textile business and the flooring business, surprisingly, have done well. margins have come in excess of 15%, 15.2, 15.3, if I'm not mistaken. The flooring business has reported EBITDA margins of 8.3%. The debt has come down to 1,500 crores. And therefore, I think the expectations in terms of reasonable amount of growth expected to get carried in the next few quarters is what the management probably believes. And if that probably happens, that should get translated into better numbers going forward as well. The US FTA, if the free trade agreement is signed in, Welspun will also be a big beneficiary because a lot of their clients also come in from the UK market as well. So that can be a huge plus factor as a value add if that comes through and incrementally positive in terms of their volume growth as well. So I think decent set of numbers. I think the stock is reflecting that. Trading above key pivot levels as we see at markets with India, and therefore the momentum might very well.
Okay, absolutely. And look at Shriram Finance, strong moves coming in on this particular counter, 9% uptick now, 1959, that is the level. Stellar set of numbers, and we pointed out the stock. And then I think we should pull up Persistent also. We pointed out this stock as well, and this stock is doing pretty well in today's trading session, up around 3% fresh high for both Persistent and Shriram Finance. So bang on when it comes to the stock picks and the selection, Shail.
Okay, let's again shift focus. It's 9:40, and let's look at the intraday chart of the Nifty. Brijesh, coming to you. So the first resistance, which was at 18,986, is now a strong support because obviously the index is above that, and any test of that support level will further embolden the bulls. At this moment, Brijesh, would you suggest that sensible traders move to 19,000 call, or will 18,900 still be the mainstay?
I think right now it's advisable to stay at 18,900. Maybe we'll need to have one more 1 hour of trade closing close to this level. I don't want to see that maybe close to 19,000, 19,050. Some slightly sideways consolidation might take place. So the confidence would be more of 18,900. If everything stays cool, then the target for the Nifty is 19,100 on the higher side. Slightly little bit of more confirmation is needed because this is exactly the resistance zone where the Nifty is getting slightly stuck. Some more confirmation, half an hour, 1 hour trade more above this range will confirm for another 100 points on the higher side.
Fair point, and that's a fairly sensible thing to say. 19,000 call at the moment expiring on November 2nd is priced at 124 rupees. Remember, we picked 18,900 at 160 rupees, which is now trading at 183. So in short, that's how the options trade work, and it would make a lot of sense. Brijesh, would it make a lot of sense at least to book a partial or a lot of profit on the 18,900 call? It's moved 20 bucks over 160. So in terms of percentage, that gives you a 12.5% return in less than half an hour.
Yeah, very true, sir. This is the first morning trade. Making a money is quite more important. So one should take this profits, and maybe after 1 hour and so, if the market sustains, then definitely one should go for the 19,000 call price for the weekly expiry. But right now it's advisable. It looks sensible also to take some profits, and then always the re-entry can be made at whatever the level the market looks like.
Okay, absolutely. And on that note, thank you so much, gentlemen. Thank you, Brijesh. Thank you, Mariresh. Always good to have both of you on BTTV. Thank you so much. So let's shift our focus now to the corporate side chat, and the company on our radar today is Sonata Software. The company posted healthy set of numbers. It reported 10% YOY rise in its net profit at 124 odd crore rupees for the second quarter, and to discuss this the numbers and much more. We have with us the management with us. We have with us Mr. Jagannathan Chakravarti, who is the CFO at Sonata Software. Thank you so much and very good morning, Mr. Chakravarti, for taking the time out and joining us here on BTTV. Good set of numbers coming in for the second quarter. And I want to start with your international IT services business. So the revenue in USD terms grew 4.6% on a sequential basis. The margins have also moved substantially. So I want to understand from you that what would be the revenue drivers going forward, and how are you planning to sustain this kind of margins going forward? Could you please unmute yourself, sir? Sir, could you please unmute yourself, please?
Yeah, thanks for that. Good morning to all. Thanks for this opportunity to explain our numbers. This quarter, you would have seen we have grown at 4.6% and constant currency was 5.2%. We have been mentioning that our order book as well as the pipeline have been very, very strong for the last few quarters. We have signed multiple large deals. Continuously, we have updated the market on that we have been signing large deals. So this is actually helping us to maintain the momentum. The large deals have helped us to maintain the momentum. Our focus on modernization and digital engineering has actually helped us to actually penetrate into the key areas of the business in the customer's overall digital strategy. This has helped us to position in a differentiated way compared to the other competitors. This we continue to gain the momentum. Our pipeline and order book is looking very, very strong. This will help us to maintain the momentum in the next couple of quarters also. For a whole year, we initially guided that our growth in revenue will be the high teens growth. We continue to maintain the same guidance and we are very, very confident of achieving the same. Regarding margin, we have told earlier also that we will be at our EBITDA without other income and forex will be in its early 20s. So we maintain the same guidance. Between a quarter, one quarter will be more, one quarter will be less. The reason is because this quarter we improved our utilization and the on-site percentage of revenue reduced a little bit. This helped us to gain the growth in the EBITDA for this quarter. But as mentioned by us, will continue to invest in the growth front-end technology team, front-end sales team, AI, Microsoft Fabric. These investments will continue, and that will be in the range of 1.5% to 2% of EBITDA. And depending on a particular requirement of the business, this investment will be fine-tuned on quarter basis. So we are sticking to our guidance that EBITDA before other income and forex will be in the low 20s. So that's how we have guided the market.
Right. Mr. Jagannathan, good morning and welcome to Business Today Television. We'll start with your stock price chart, sir. What a fabulous rally not only has Sonata, which is today at a record high, has seen. It's with the entire mid-cap IT space that has shot through the roof. I'm sure all people working within Sonata and all investors and shareholders are extremely happy, Mr. Chakravarti, with your performance. I need to know what is the order book at this point of time? What are the pipes telling us in terms of deal sizes? And by any chance, are you compromising on margins while winning these large contracts?
Pipeline is looking. We have declared that we had 1.24x of the book to bill is 1.24x, which reflects our strong, very, very strong industry-leading order book position for us as of now. So the second question about compromising on the margin, we need investments to continue to grow because this brings us an opportunity with AI evolving and other like Microsoft Fabric coming in. If we continue to invest, our future growth will be much, much stronger. Like, for example, we have invested earlier in Microsoft Dynamics, and we are leaders in the space. So we continue to gain momentum in that and have a differentiated reach out to our customers. That way, we have to continue to invest, and this is a technology business. And so we will continue to invest on the technology front. And also, we have to invest more on the sales side because from the earlier position, for our continued growth, faster growth, we need this investment. This is not just to reduce we are not compromising on gross margin when we sell the deal. Most of the large deals, whatever we have got, we have not compromised on the gross margin. The deal on its full run will meet the company's gross margin levels only. There can be a short-term investments like transition costs and other things. Other than that, the large deals are also not a compromise on the gross margin level. We are not compromising on that. We have specifically called out that we need investment of 1.5% to 2% of EBITDA every quarter. That will continue to be there unless we invest, the future growth will be impacted.
Okay. As also, Mr. Chakrabarti, let's talk about the margin pressure that you're facing on the salary side. Of course, you compete with larger tech players such as Infosys, TCS and Wipro, not only to retain existing talent within Sonata, but also to win talent to come work towards you. How are you seeing the salary structures moving over the next 1 year or so? And what has been the hiring pipeline on a net level after maybe 50 or 60 quarters? I'm talking about 12-15 years. We've seen a net attrition, at least in the top 3 players when it comes to employees. What has been Sonata's experience?
Okay. During the COVID, when the recovery happened, the demand suddenly spurted up, leading to a large demand coming in at the same time, resulting in a lot of attrition also, very high for all companies and the whole industry, had a big amount of attrition. This is moderated over a period of time, and we are running at around 15-16% of attrition at present. The salary trends were suddenly become when the attrition went up, the salary momentum increased a lot, and hence the cost also went up beyond the agreeable limits of whatever business since it makes out of it. However, now the moderation is stable. We continue to see there is a lot of opportunity for the IT industry as such for the next decade at least. So with the new technology evolvement and new requirements of the customers, there will be continued demand. With this kind, the picking up of the employees, continuous upgradation of their knowledge, and then training and development plays a very, very key role in bringing their people for the new technology adoptions, whatever the customer needs. Considering this, the salary trend will be it will gradually, there'll be an upside in the salary cycle. But overall, we will continue to be monitoring the same to get the bottom of the pyramid has to be added, like campus additions and other things have to continue to be there in whenever it comes in to maintain the average cost of the overall delivery. So this is on the cost front, and on the people addition front, we have not put any block on any hiring anything. We have not stopped anything. Hiring will continue to be there based on the requirement of the business. It depends on what project, where, how much is the requirement. Based on that, we'll continue to hire.
Okay, absolutely got that, Mr. Chakravarti. And we have been talking to a lot of experts about large cap IT space and mid cap IT space and how mid cap IT companies are performing better than the large cap IT companies. So you will be, I think, the best person to answer that what's really happening in the mid cap IT space, what's working for you, and is there any sort of a slowdown that you are facing in any particular sector?
Yes. I'll answer the second question first. That the few sectors like high tech is still very strong, and healthcare has the momentum is little slow. I will not say it has not reached a level of softness. Also, it is slightly slower compared to the momentum what it had earlier. That is normal to happen in any business. When there is a peak, then there can be some amount of flattish kind of a situation happening. So these are the two places where we are seeing a little bit of softness overall coming in the business. However, the other side of areas like retail, manufacturing, and other businesses, we have not seen that much of slowdown coming in as of now. Particularly BFS have not seen them. We are not in the core banking sector, but we still have the financial services. We have not seen that kind of a slowdown in this space as of now. The difference between mid cap and large cap companies are the agility, what we are able to bring in, and we are able to bring a specific solution to the customer's requirement. Adoption, agility, and specific solution to the customer requirement actually make us to bring in a differentiation for the customer. So that is the difference which brings in a large stark difference for between a large player and a small player.
Okay, absolutely. And you have mentioned in your investor presentation that the company has won 35 large deals and 38% of large deals pipeline are with Fortune 500 clients. So if you could throw some color on these large deals, I mean, if you could tell us about the quantum of deals.
The large deal definition differs from the company to company. There is no one industry definition for large deals like what is there in the utilization and other spaces. But for a size of a company, our large deals are anything which is like $3 to $5 million and above have more than 1 year of contract. What we have, we consider this as generally as a large deal. In the digital space, slightly different here because we can't call out specific amount. The managed services deal which we signed for taking over the IT services for 10 years and bringing the efficiency in that over a period of time, it's a defined number of value of the contract. Whereas in the digital services, particularly cloud, data, AI kind of services, it's an incremental growth of the contract. So we can't define a specific value at present because you can't see a AI deal at 100 million. It is not possible. The application of AI in a regular operations is possible. So this is a difference. If it is going to be a AI services, it will be incremental growth in the contract value. So getting a specific value-based large deal definition will not suit for these kinds of services. So we have to go with a potential to have a continued services with a large wallet share in a customer. That will be a more qualitative definition for a large deal rather than a specific size and specific value for the contract.
Yeah. Mr. Chakrabarty, let's stay with the deal wins, the deal sizes, as also this very sharp growth in revenue. I wish to understand on behalf of our viewers, when you look at the granular part of the percentage rise in sales, how much of this rise in sale has come from existing top 10 clients and how much of fresh revenue growth is from new clients?
So we have not disclosed this data specifically, but top 10 we have given in our investor presentation. We continue to cover the top 10 customers are there. The top 10 customers continue to grow very well for us. And this is a very strong, we see a strong momentum in the top 10 customers growth in this. The new customers, if you see, the largest, whatever we have signed in, their new customers, specifically the largest deal, which 160 million deal, they are all in the transition stage. So the full evolution of this revenue into the total revenue will take a couple of quarters. And the 160 million deal we have completed the transition in Q2, and then it will start getting the momentum from Q3, Q4 on the revenue front. As well, the other deals will take a little bit more time.
Okay, and just as an aside, how much do top 10 clients contribute in terms of revenue, and would you be comfortable sharing the profit number as well?
Top 10 clients, it will be between 45 to 50% of our revenue comes from the top 10 customers. We continue to be having a little bit variation in this quarter on quarter. Margin front, they continue to be at the company average. No, there is no exceptions to these things, or no, it's not that top 10 customers have a reduced margin. I understand the perspective with which you are asking the question. So there is no compromise on the margins in specific customer. The whole deal, if you take, as I mentioned earlier, you will have kind of some part of the deal in the beginning when the transition is there, the margins may be different. But overall, in the full deal, we are not compromising on the margin, and it is same as the company's margin level.
Right. Thank you, sir, for your time that you spent with us and our viewers in explaining how this wonderful performance came about. All the best wishes, Mr. Jagannathan, to your team and to yourself for this fantastic performance that's resulted in a fresh record high on the counter. All of us at BTTV often ask a lot of mid-cap IT companies on how they describe this outperformance when they compare themselves with larger peers. We haven't had an answer that satisfies our question, but nonetheless, जैसे कि बाजार में कहते हैं भाव भगवान है और वो भगवान हमारे सामने है. All the good luck and all the best wishes to you, sir.
Okay, back to the
We'll
markets.
shift focus,
Shail.
Tanya, back to the Nifty. Back to the markets, Tanya, and it's been a blowout first 45 minutes of trade. Not only has the Nifty held on to its earlier gap up of 80 points, it's built up a phenomenal rally on top of that. At the moment, 148 points higher at 19,000. Remember, we had picked up an option trade of 18,900 Nifty call for November 2nd at 160 rupees. That trade is now at 193. Brijesh Ale, the technical analyst who has suggested that call, had said to book a large chunk of profit. And now we are watching the 19,000 call at about 131 rupees. So that's how options trades work, ladies and gentlemen. It's a quick draw that you make at a certain point of time, and you are quicker to book profit. Tanya.
Absolutely, Shail. I think markets are in a Friday mood, just like you and me. And that's why it's a sea of green on the Lal Street. And I hope this continues going forward as well. But with that, it's now time for us to wrap up this edition of Market Today. But you don't have to go anywhere. You just have to stay tuned because lots more coming up for you only on BTTV. So stay tuned and many thanks for watching.
Indians are celebrating the festive season with Apple this year. According to reports, for the first time ever, iPhone sales crossed the 15 lakh unit mark in just first week of the festive season. And though iPhone 15 is the latest model, it's the previous 13 and 14 models which are flying off the shelf. And it's not just the iPhone. Other top-end handsets are also in huge demand.